Hi, this is Weekly Report. Today is 29th of September 2014, and I'm Yuri Cihush, financial analyst at Fibo Group. This week, we'll have some interesting data that will hit the market, which is sure to bring a lot of traders. The first half of the week will be dominated by micro-statistics with average influence on the market, and the second one will have high-importance statistics. On Monday, we will see the release of the preliminary consumer price index from Spain and Germany, and data on the labor market in Japan. On Tuesday, we will have German retail sales, unemployment from the Eurozone, and GDP out of Canada. Wednesday shows the index of industrial business activity from PMI, European countries, and the United States. Thursday will be the most anticipated day of the week, as traders await the press conference by the ECB and the release of the latest interest rate decision. At the end of the trading week, we'll see the release of the unemployment rate from the United States. Trading at the start of the week will be quite volatile, as the CPI from Spain and Germany hit the market, which tends to bring traders from all sides. These two countries have a very different situation. Spain has shown a decline in consumer demand in the last 2 months, which followed with a decrease in consumer confidence. In Germany, the CPI has remained about zero for the last 2 months, and the expectation for this release not put too much confidence to impress investors. If the number comes in below zero, it is sure to put pressure on the euro. Following Monday, Tuesday promises to have a big volatility with the release of retail sales from Germany. This data promises to create some action, as the number is quite volatile and will have traders guessing the outcome. Even more important will be the release of the unemployment rate from the Eurozone, which has been on the decline recently. Another low number may support the euro. On Wednesday, traders will focus on data on manufacturing activity from the PMI European countries and the United States. In particular, traders will pay close attention to the British pound, the euro, and the American dollar. In my opinion, the most actively traded will be the American dollar, as business activity in the United States is on the rise. In the UK, there is slightly different picture and situation is worse. Quite bad situation is in the Eurozone, and we may see number under 50. Thursday, we'll see the ECB press conference followed by the interest rate decision, which will create extreme volatility in the euro and should be a great day for trading. And as usual, with us is Andrew Masters, an investment analyst from Fibo Group. Andrew, I welcome you. Can you comment on the interest rate of the ECB?
Thanks, guys. Like usual, it's great to be here. In his speech on Monday, European Central Bank head Mario Draghi said that the ECB stands ready to use any tools necessary to boost inflation and lift Eurozone growth. Speaking to the Economic and Monetary Affairs Committee of the European Parliament, Draghi also mentioned he expects further interest from banks for its new and unusually long loan program when the funding is offered again in December. He said the 82.6 billion euros taken by 250 banks last Thursday was in line with expectations, and that the banks will have another chance for the funding in December. The number failed to impress analysts, and in their opinion, a lower than expected interest in the loan offering last week spooked investors, and there are fears that it may lead to more drastic measures from the bank, such as printing money to buy securities, which would not go down well with Germany. German Finance Minister Wolfgang Schäuble rebuffed calls from struggling Eurozone countries to boost spending to strengthen domestic demand, saying structural reforms were the way forward. A Reuters poll on Monday predicted that the second tranche of the loans in December will attract better demand than last week's sale, but is still likely to leave a third of the total 400 billion euros on offer unused. Such quantitative easing by buying a large amount of sovereign and private debt has been used successfully in the past by other major central banks, including the US Federal Reserve and the Bank of Japan to kickstart their economies. All of these harsh measures came about after Eurozone economy stopped in its tracks in the second quarter, which forced the ECB into a difficult corner with no other option other than to act. Draghi also made an appearance at the famous Jackson Hole meeting in Wyoming and confirmed his stance by mentioning that fiscal policy was the way forward to pull the EU out of this big hole. As the EU was talking of starting their economy with huge stimulus programs, the US is in fact cutting back on theirs, with the announcement that they will be pulling the plug on their asset purchase program in October. The euro has fallen nearly 10% against the US dollar since the start of the year, and with the US seemingly on the road to recovery and the Eurozone doing what it can to stay above water, we may see more pressure on the European currency and indeed further losses. Thanks guys, that's all from me, and I'll see you again next week.
Thanks for interesting report, Andrew. The end of the trading week is likely to be focused on the labor market data from the United States. Despite the release of the business activity in the services sector of the Eurozone and the United States, the unemployment rate in the US has fallen about 1% this year, which gives signals that the US is on the road to recovery. To sum up the trading week, we anticipated there will be volatility in all measured currencies. The interest rate decision from the ECB will be the big event, but most traders expect the rate will be on the hold for the near future. Thanks everybody, and have a profitable trading week.